It's an entirely bizarre situation, Adam, if you think about it. They need that gas, and Putin knows they need that gas. They're openly talking in the media about working as hard as they can to wean themselves off that gas. But I wonder whether they've given consideration to the fact that he might just decide to turn off the gas. The belief in the US and in Western Europe amongst the NATO allies is that he needs us to buy that gas more than we need that gas. Time will tell.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart, and we are extremely fortunate to be joined again for this video by the Doomberg chicken. If you didn't watch my earlier video with Doomberg from probably about 2 or 3 months back, Doomberg is the most important new entrant to the financial media space. They are doing it's a small team there behind that chicken, and they are doing a phenomenal job talking about really the main macro trends that are going to impact our way of lives going forward. They talk about something that's very near and dear to my heart from the work I used to do before Wealthion, which is the importance of energy to the economy and really to life as we know it. They go as far as stating the mantra, energy is life, which I completely agree with. It's one of those things like water or air that we take for granted until it becomes scarce. And in the aftermath of the Russian invasion in Ukraine and the international community's embargoes against Russia that's been interrupting the flows of energy really all around the world, but particularly to Europe, we are seeing the consequences of taking energy for granted playing out in real time right now. So I want to dig into that very deeply with the Doomberg team here. Doomberg, thank you so much for joining us once again.
Adam, the pleasure is all ours, and it's really fantastic to be here again. Appreciate the opportunity. Thoroughly enjoyed the two-part series that we did together a couple of months ago. I think the response was great. And so much has happened in that time that it was really worth it to come back and to re-engage, and very, very grateful for the opportunity.
Well, thanks. And it is amazing how much has happened since we had you on last. So we'll get right into that in just a moment. First, I want to congratulate you on the continued success of Doomberg. I've just been watching your subscriber numbers both on Twitter and on Substack just shoot the moon, and for very well-deserved reasons. You guys are truly phenomenal at what you do here. And I know you've got some big news to share about where you're headed with that business. Maybe I'll leave that as a teaser for folks to stick around, because we're going to get into that at the end of this interview. But let's start, Doomberg, with your kind of macro reaction to probably the two biggest things that have happened since we last talked. One has been the outbreak of the war in Ukraine, and the second has been the continued skyrocketing of inflation with continued disruption in the global supply chains, and we've got China now going back into lockdown. How are these things changing, impacting the macro landscape from your view?
So as you said in the introduction, our entire philosophy is that energy is life, and ultimately the Russian invasion of Ukraine, we believe, which by the way, like many others, we didn't imagine was possible and doubted would happen until the moment that his troops crossed the border. We strongly believe that he would not have gone into Ukraine if he didn't believe he had all of the leverage over Europe vis-a-vis their energy needs, especially in the form of their dependency on Russian natural gas. Now, whether he overestimated that leverage or underestimated the response from the West, we have to wait for history to both unfold and be written to find out. But there's no question that the disruption in the energy markets that we have already seen, and we will almost certainly continue to see on a go-forward basis, are epic and historic, both in the swiftness of the response and the long-term consequences of them. And we're deeply uncharted territories. We wrote a piece called "On the Cusp of an Economic Singularity," where just the sanctioning of the Russian reserves themselves is sort of a historic act, perhaps on par with Nixon taking the dollar off the gold standard. And we're still in the early days, but the reverberations from decisions like that usually play out over years and decades. specifically to energy remains to be seen. We have a lot of disagreement amongst the NATO allies as to how and whether to sanction Russian energy. There's a lot of controversy that the continued procurement of energy from Russia is a de facto funding of this invasion. Germany is the most dependent of the significant NATO allies on Russia for their energy needs, and they're also, perhaps not coincidentally, the ones being most cautious as it pertains to the vigor of the sanctions and whether they should be applied to things like gas and oil and coal. And so what was a burgeoning crisis undoubtedly has been accelerated by the catalyst of war. And it's just an amazing thing. If you look throughout history, energy crises and wars are almost always correlated. And this circles back to, energy is life, and the lack of energy, therefore, is death. And when people are facing the prospect of death, they're usually willing to fight for life.
All right, great kicking off context here. I want to go into a piece that you wrote recently called "Measure Twice: Sizing Europe's Natural Gas Crisis." It's a great piece, and the reason why I want to sort of make it the kicking off point for this video is it's a really just stark case study on how unavoidable the reality of dealing with energy is, right? In other words, you can have all sorts of policies, you can have all sorts of social or national aspirations or mandates, but that at the end of the day, you need the energy to make them work. And when you don't have it, things get rough fast. And the EU is learning that in spades right now. So you mentioned this a little bit in your intro, but Europe is heavily dependent upon Russia for natural gas, and there's been a lot of concern as to should they be taking it because they're de facto funding the war. Russia's been rattling its saber that says, hey, if you don't pay us the way we want you to pay us, we're going to shut it off. So it's a big focal point of the world right now. But I just want to I want to scope this for people in terms of the size of its significance. So pulling up some of the stats you mentioned here, Europe relies on Russia for the equivalent of 30% of the entire global liquefied natural gas export market. And it currently has let me see if I get this metric right, a 15 billion cubic feet per day gap that they would have to fill if Russia just sort of turned off the spigot here. So their way of life is really completely dependent upon that gas flowing right now. Can you just give a quick history as to how Europe became this dependent on Russia's gas? Because they made a number of policy decisions over the past decade or two that made them especially vulnerable to this situation.
You bet. And maybe before I dive into the direct question, I'll give a bit more context on the article to frame that answer. And the whole point of that article, in fact, was to put various measurements into the same unit so that you can make easy direct comparison. And one of the big challenges in analyzing the energy markets, even for professionals, is the fact that it's very difficult to compare both different sources of energy and even the same source of energy in different parts of the world, because there's an entire potpourri of units that are used to describe this. So for natural gas, for example, it's sold in the US in dollars per million BTU. It's sold in Europe in euros per megawatt hour. Production might be measured in million metric tons per year or billion cubic feet per day. So what we did in that article is we took all of the numbers and put them in one standard set of measurement units, which is the US's preferred production number, which is billion cubic feet per day. And so the US in total produces, let's say, 90 billion cubic feet of natural gas per day and exports through our LNG export terminals roughly 12 billion cubic feet per day. The entire amount of natural gas that Europe imports, as you said, is 15 billion cubic feet per day. So another way to look at it is Europe depends on Russia for 125% of the entire US's current LNG export capacity. It's a staggering number. And then we just put that into context with the the suite of alternatives that Europe is trying to put together. So, for example, there's a lot of talk in the market about how Germany is going to build LNG import capacity as part of its plan to wean itself off of Russian gas. Well, basically, if they build the three major projects on the board, that's a total of roughly 3 billion cubic feet per day, or 20% of the bogey. And that won't come on until 2025 or 2026. How did Europe get into this situation? It's sort of a perfect storm of platitudes and bad policy making. So the primary reason is Europe has done everything it can do to stunt homegrown natural gas production, while at the same time pushing industry to decarbonize. And so they basically started substituting coal for natural gas, while at the same time eliminating their own homegrown natural gas, which made them reliant on imports. And at the time when they made these decisions, imports from Russia via natural gas are substantially cheaper. And that's the way Europe in general, and Germany in particular, went. Another thing they did, especially in Germany, is they set about the task of systematically shutting down their nuclear power plants and replacing it with intermittent power sources like renewables and wind. But the real genesis of the crisis started last year, which is something we wrote about several times on Doomberg, and others have as well, is natural gas started to get expensive last spring, which caused Europe to perhaps wait a little bit for its seasonal replenishment of its storage capacity. And then that waiting sort of begot the price explosion that we saw. And let's be clear for our listeners, the price of natural gas in Europe exploded. And at its peak, it was trading for 15 times the cost of natural gas in the US, because our gas is stranded here. We can only export as much as our LNG export terminals are rated to export. And suddenly there was a bid in the market for more LNG than the world could provide. Korea, Japan, China are all bidders of LNG. And when Europe found itself heading into winter with, I would say, scandalously low levels of storage of natural gas, they panicked and went into the market and tried to literally outbid ships that were heading to Asia and caused them to turn around to Europe. So the actual price peak of natural gas of 15 times the ratio of what we were paying here in the US, or to make it even more equivalent, back to this concept of units, the price of natural gas Europe was paying for was over $600 a barrel oil equivalent, a shocking number. All that occurred before the Russian invasion, you see. And the peak of natural gas in Europe occurred before the Russian invasion. We believe that the price spike in natural gas emboldened Putin to think that there's no way that they couldn't come to terms with me because I hold all the cards on energy. So kind of a long answer, but I think it was an appropriate to frame it, and then also to give the proper context that the war has made an existing crisis only worse.
No, you did exactly what I was hoping. It was great level setting there. Real quick, I haven't looked, being totally honest, recently at the price of natural gas in Europe. I'll go look to see if we can find a chart to overlay here. But do you know off the top of your head how it's come down from the highs?
I do. So today, in again, US, the US equivalent of dollars per million BTU, the price of natural gas in Europe peaked over 70, and now it's trading in the high 20s, just under 30. And I guess that's not quite true. I should correct myself. It peaked to 60 in December, came off the lows, and then shortly after the invasion, it did go back up to $70 per million BTU again, but has since come back down from the low. So I don't want to leave the viewers with the wrong impression. But the original crisis that was really crazy, at $60 per million BTU and $4 per million BTU in the US at the time, the ratio was in fact 15, and it did peak before the war. But the actual price of natural gas in Europe peaked at near $70 per million BTU shortly after the invasion. But by that point, the US gas price had also come up, and so that ratio had shrunk a little bit. But the price of natural gas today in Europe is trading for 4 times what it is here in the US, which is still a staggering number, Adam. It is a number which makes their entire manufacturing sector that is dependent on natural gas as a feedstock uncompetitive on the global scale. It is a recession-inducing number, and that's more than half off of the panic highs after the war. All
right, and I do want to get out in a bit, and so you're foreshadowing here. So it is still so high that it is likely to continue to constrain economic growth. As you use the word recession, maybe even take Europe into a recession.
So here's a quick way to benchmark what $30 per million BTU means. Multiply that number by 6, and you get the barrel of oil equivalent. Back of the envelope calculation. So natural gas in Europe today, which is a critical input for electricity, for heating, for chemicals, and fertilizer, is trading at the energy equivalent price of $180 a barrel oil as we talk.
Okay, yeah, no, that's actually a great way to compare it, and that's a frighteningly high energy cost. All right, and sorry, what pre this crisis ballpark? What were European natural gas prices like?
A year ago today, European natural gas prices were trading around $8 per million BTU, and that would be the equivalent of $48 oil per barrel.
Right. Okay. So yeah, so it is the equivalent if we Americans here were, all of a sudden our energy costs, pretty much doubled or tripled from this point. I mean, we got $90 oil, even though our natural gas is a lot cheaper than what they have in Europe right now.
Yeah, and also our natural gas is a lot cheaper than oil too. I mean, we're sitting here recording, it's at $7, so that would be $42 a barrel oil equivalent, which just shows you the power of the shale revolution and the value that natural gas derived both directly from shale and as associated gas in the production of shale oil has really created this abundant windfall for American-based manufacturers and for U.S. consumers. And for an industry that is so totally maligned, no industry has created more value for American consumers and American employment than the shale patch. And it must be frustrating to be an operator in that industry, to be so maligned at every opportunity, yet have delivered so much value to the country.
Right. Well, and to your point is energy and life. It shows what an unfair advantage America has had with what it's been able to do with its shale industry.
Indeed. Although I would say a fair advantage based on the technical prowess and capital risk deployed and the Americans. Luckily for us, the American regulatory system is fragmented, and many states can effectively set their own energy development policy. And that's why you have states like Louisiana and Texas carrying the load for the rest of the country, like states like California and the Northeast.
Yeah. And I know that's a dig on me a little bit because I'm in California, but it's well deserved. It's fair qualification. My point was simply not every country has shale deposits the way that the U.S. did. We were very lucky to have that here. All right. So one thing, just in sort of setting up the scene as you did too, I recall back in late fall, early winter, that another contributing factor, I believe, and clarify if I'm wrong here, is that China had made a decision to stop buying coal from Australia. And so China was out there trying to buy coal from a whole bunch of other different players, and the cost of coal started going up dramatically, and the supply of coal was getting harder and harder to get. And so China began competing more aggressively on the international stage for liquid natural gas than it had been previously. And then it got in this big tug of war with Europe because Europe needed it so desperately. And of course, that tug of war between China and the EU just drove the price to the stratosphere. Is that an accurate observation?
Yeah, it's certainly, there's nothing inaccurate about you said, but it's slightly incomplete. Yes, the trade dispute between Australia and China, which arose over Australia's insistence on a full and proper investigation into the sources and origins of the pandemic, did cause China to cut off Australia and did cause significant friction in the global market than would have otherwise been. Although over time, and this well predated the invasion, that coal found new homes as the coal that would have gone, from say Russia was replaced by coal from Australia. And it was a sort of a supply chain logistics issue, which certainly exacerbated the problem. And then what we're seeing now is China is so overwhelmingly returning to domestic coal that at some points in the market, even recently, they've been sellers of LNG that they had already procured, hoping to capture a profit on the spread, because they are going to basically solve their own problems with domestic coal, which of course runs totally counter to the entire ESG desired outcomes. And all of this was catalyzed by, ultimately, the genesis of this was predominantly catalyzed by Europe's mismanagement of its own energy needs.
Right. It's a complete blowing up in their faces of their intent, right? You know, it was started all to basically bring emissions under control and be more climate friendly. And here we have China now basically tripling down on coal, which is the hugest contributor to greenhouse gas. All right, so first let's just check in where Europe is right now in the story. It is still getting gas from Russia, correct? But it's sort of doing so with a sort of Damocles hanging over its head, like at any point this could go wrong.
It's an entirely bizarre situation, Adam, if you think about it. They need that gas, and Putin knows they need that gas. They're openly talking in the media about working as hard as they can to wean themselves off that gas. But I wonder whether they've given consideration to the fact that he might just decide to turn off the gas. The belief in the US and in Western Europe amongst the NATO allies is that he needs us to buy that gas more than we need that gas. Time will tell. I mean, there's no question that Putin has proved himself to be nothing if not reckless. He decided to make a move on a sovereign nation and to risk his regime ultimately. What about his behavior in the past months and years would make us assume that he wouldn't just turn off the knob and say, okay, we'll keep this in the ground and you can freeze. And so it's a really fascinating situation. It is a game of chicken, pardon the pun. We don't know how it's going to turn out. I could tell you this: one of the most interesting trades in the world right now, we believe, is the continued recovery and ultimately strengthening of the Russian ruble, perfectly alongside the weakening of the Japanese yen. And the Russian ruble yen cross trade is pretty pronounced chart if you have a look at it. And what is the sort of difference between the two countries? Well, one is an energy producer and exporter, and the other is an energy importer, Japan. And ultimately, energy is life, and that weakness in the Japanese yen as a consequence of the crisis in energy and the recovery of the Russian ruble, which has to have caught the American administration by surprise, is a pretty interesting thing, and one that we watch very closely as sort of the market's telling us which way they think this ultimately will be resolved, but time will tell.
Okay, and since you brought up the ruble, last time I'd looked into this, Russia was basically telling the EU, we're happy to continue selling our gas to you, but we want you to pay for it in rubles or in gold. Is that still the only acceptable currencies that they're willing to take at this point?
That's another one of these complex situations where there's a lot of incorrect information and misinformation in the Twitter sphere and in the news headlines. There was this sort of move to quasi-link the ruble to gold by having a firm bid to buy gold at 5,000 rubles per gram. That is no longer the case. They've backed off on that after about 2 weeks. But over that period, the ruble did strengthen significantly. They are still offering to buy gold in exchange for rubles at now a more flexible price. I think it's closer to $4,700 a gram today. But there was some thought that if he was going to have a permanent bid at 5,000 rubles per gram, then as the ruble strengthened, that would open up an arbitrage as the price for gold that he was willing to pay for it was higher than, say, the price being quoted on the COMEX or the LBMA, and that you might have people standing for delivery to close that arbitrage and delivering gold to Russia. Now, there's a lot of complexities in who are the approved sellers and intermediaries and whether this violates sanctions and so on and so on. But there's just no denying that the Russian ruble has recovered to pre-war levels and then some against the US dollar, which I suspect is not an outcome that the West had modeled when they rolled out the sanctions package.
Yeah, well, so it's so fascinating. But anyway, so long story short, EU still completely dependent upon that gas from Russia. Everybody is hoping that cooler heads will prevail, and that gas will continue flowing, and hopefully the situation in Ukraine tamps down, and we can all start the repair process and whatnot. But Europe certainly must have gotten the memo at this point to say, look, we need to be less dependent upon the supply from a country that's as unpredictable as Russia has proven itself to be for them. And we get back to what you were saying at the beginning, which is it's not a simple, there's no simple solution out there to just turn to another provider for liquid natural gas and get the gas in the quantities they need into Europe. You talked about the fact that their current shortfall, or what they depend on Russia for, was worth or represented 125% of the entire current U.S. liquefied natural gas export capacity. So they would need to take all of America's exported gas plus some more. The U.S. can't scale up terribly fast. You mentioned they have 6 major natural gas export facilities. Sounds like they just opened a 7th hub, but we're not going to be able to add more, at least not for several more years. And similarly, it sounds like in Europe, and I'll let you give the details here, but it sounds like Europe doesn't have a ton of infrastructure for receiving this stuff, that they would need to put in a lot of capital investment to be able to receive more gas than they're currently getting from non-Russian suppliers. Is that all true?
Yes, absolutely. We talked about the import terminals that Germany is fixing to build in the next few years. They're right now the major import terminals across the European countries that need the gas the most are predominantly full. There is some space to take extra gas in Spain, but here the problem is there aren't the pipelines to connect those import terminals to the Frances and the Germanys of the world who need it. And so in addition to, natural gas is a gas. It's not a liquid. It's not a solid. Because it's a gas, it makes it incredibly hard to transport. That's why it's not a global commodity. That's why you see these price differentials at 15x in Europe versus what the US was paying back in December. So to put natural gas on a boat requires a really sophisticated export facility, and to receive it requires a really sophisticated regasification facility. Those facilities don't exist to handle this deluge. They're in the planning. We'll see if the environmental movement doesn't impair these countries' ability to create these facilities. But there doesn't really exist today a lot of spare capacity to bring on much more LNG, which is, again, just another barrier to finding a solution in the short term. And that just means in the short term, Putin still holds those cards.
Okay, yeah, and the infrastructure that's required, I know you've said this a couple times already, but I just want to underscore it. I mean, this is years of development that we're talking about here, right?
Yeah, the 3 import terminals Germany is scheduled to bring online are being built by the bluest of blue chip industrial companies. And they won't come online until late 2025, early 2026 at the earliest. And these are multi-billion-dollar projects. So these are serious, if you've ever toured an LNG export facility, it is a symphony of pipes and pumps and gauges and whistles and bells, and it's a miracle that the thing works at all. It really is a sight to see. I wish more people would see them so they can understand the sophistication of the fossil fuel industry and why it's so critical to the economy. But yeah, these are major projects, and in normal times would almost certainly be caught up in the courts vis-a-vis environmental nuisance lawsuits and so on. So we'll see if there's political courage to cut through the red tape and to accelerate these projects in a true sort of wartime footing, because we're literally at war. But there's no scenario where, by some economic miracle, we create LNG import terminals out of whole cloth in a time frame of months. It's a years-long project, and it's billions of dollars, not millions of dollars.
Okay, great. And so, of course, the key takeaway here is that Europe is going to have to continue to contend with Russia as a supplier as best it can, in this process before that supply comes online. That's, you said a lot of these things don't come operational until like 2025, 2026. They're not going to come operational at 100% capacity, so that's also going to be probably years, I'm imagining, getting up to full capacity in these countries. So, and a lot can happen between now and then. So the point is that, there is no white knight riding to Europe's rescue here. It is going to have to continue dealing with the huge uncertainty with Russia for years to come, at least. All right, so I want to introduce another concept here that you touched on briefly in the piece, which is, natural gas is it's much cleaner than, say, coal. We talked about that earlier, right? And what's interesting is if you just look at the Biden administration's perspective on it, it was sort of lumped into the evil, fossil energy space. But now, I think because the world is waking up to how dependent they are on these supplies, there's this movement now to kind of reshape, our thinking out of it. And I've even heard that you're going to start seeing liquefied natural gas kind of get moved under the clean energy banner, the green energy banner going forward. And to be honest, there's actually, rationale to do that if it's replacing coal, right? It's a much better alternative emissions-wise than burning coal. But I'm sure that it sticks in the craw of a lot of dyed-in-the-wool green clean energy folks. So what's your prognostication here, Doomberg? I mean, are we gonna see LNG begin to become championed as a green energy fuel?
One would hope. Look, there are no scenarios that involve radical decarbonization without natural gas and nuclear that don't involve mass starvation. It's just a simple calculation of physics. 85% of our energy today comes from fossil fuels. The energy needed to create energy-producing alternatives is not available, and so it won't happen on a time frame that matters. Recognizing that fact is important. But as you said, not all fossil fuels are created equal. And on a sort of energy utility per CO2 emitted basis, natural gas is cleaner than oil, which is cleaner than coal. And to the extent that we can proactively replace coal with natural gas, or in this case, proactively replace Europe's natural gas dependency on Putin with a relationship with the West, that should be viewed as a positive thing and something that we should pursue, both for our own domestic energy security, our own domestic economic development, and our geopolitical power. All three of those things point to unleashing the full power of the U.S. shale patch, building the pipelines necessary to lift it out of the fields, building the export facilities needed to be able to project American power in the form of energy globally. If we don't do that, then there's a whole series of bad choices for us to choose from. And even if we do it, it doesn't mean things are going to be great. But it's just undeniable that the simplest, easiest thing to do, aside from nuclear, which I'm sure we'll talk about, is to unleash the full power of American ingenuity in the shale patch. One of the things we proposed, for example, is if solar is going to be a big part of the energy future, and we actually think it should be, we should be co-locating polysilicon plants in Appalachia so that we can become the global producer of low-cost polysilicon using American energy as the foundation, as opposed to energy, cheap coal in China. These are all very simple things that we've laid out in a piece called a serious proposal on U.S. energy, or something similar to that. And they're just so self-evident. And ultimately, physics will dictate that we have to get there eventually. We just wish we wouldn't have to suffer so much pain before getting to the right answer.
Yeah, and that sadly seems to be the way that most governments go at it, where they try everything else possible before they finally decide to do the right thing. All right, so I had an interview that I did, a couple weeks, maybe a month ago, with David Knight-Legg, who was basically the subject of a New York Times and then a Wall Street Journal article, where basically said, hey, look, a lot of Putin's behavior becomes a lot more understandable if you look at the war less as we're trying to repatriate culturally similar people, or we're trying to sort of denazify our neighbor, or even allergy to NATO expansion and more of locking up some of the world's top key resources in gas and oil and other energy deposits that are in Ukraine. And I think having had that interview and then watching, what's been written in the media since, it seems more and more people are coming to that conclusion here. So just underscoring that, again, energy is life. At the end of the day, it's almost always all about energy. To your grand idea of better policy that we could adopt, can you just give a quick sense of what, in America and largely around the world, oil deposits are getting harder to find, they're getting more expensive to extract. We've had this bonanza in the shale oil patch, but it is more expensive than conventional oil fields, and they deplete much faster. So there are just sort of some longer term supply concerns. Is that the same true with natural gas, or do we have substantially more supplies of natural gas versus oil?
So it depends who you ask. If you ask the CEO of EQT, I believe his name is Toby Rice, who was interviewed on Alex Epstein's podcast. He says at $4 or $4.50 per million BTU natural gas long term, we have effectively an infinite supply that if we would just be unleashed by the US government. And in fact, back to a discussion we had earlier, there are substantial shale deposits around the world. The US is the only region that has both the technical know-how and the regulatory approval to go after it. So Europe itself, for example, has substantial shale deposits, but through various environmental movements, for whom their funding is an interesting question, where that funding comes from. Many have speculated it comes from Russia as part of a disinformation campaign to make Europe more reliable on Putin's natural gas as opposed to homegrown energy. There are huge shale deposits spread throughout Europe and the UK, and it's just a political third rail right now because not enough pain has been suffered. But ultimately, yeah, I do think the best bridging technology alongside nuclear power to decarbonizing our economy and inventing the technologies we need to build a standard of living for as many people as possible is a combination of nuclear, natural gas, and then building out renewables and trying to make them baseload. And then, of course, other efficiency projects that we could do and spreading our batteries across plug-in hybrids instead of pure BEVs are all things we can discuss. But there is no scenario where the world decarbonizes without natural gas, unless you're willing to tolerate hundreds of millions or billions of people starving.
Okay, which hopefully is a non-starter, but you never know. Now, the word nuclear has come up several times in several of your answers here, so let's quickly get into that. Reading your piece here, it seems like it's directly relevant because Germany is decommissioning its remaining 3 nuclear plants, whereas if it just kept them running, that would make a nice contribution to beginning to fill the gap that Russian gas energy supplies. Please clarify that in any way you think is important, but also just talk about nuclear and your outlook for it, or maybe perhaps your desired policy for it, given where it could play in the energy solution here.
Yeah, and it's not just in Europe. We're making the same silly mistakes here in the US as well. So we wrote in the piece that simply keeping the 3 nuclear power plants online would contribute 10% of Europe's natural gas shortfall that it currently depends on Putin for, and then making some investments in the French nuclear grid to increase their production capacity, do some better maintenance, some needed repairs and improvements could bring that up to 17%. We got those numbers from an alternative proposal called I'll have to pull it up here, but it's an alternative proposal to weaning Europe off natural gas, which ultimately wasn't adopted, but that's the right size. So roughly somewhere between 10 and let's say generously 20% of the European dependency on Putin could be addressed simply by reopening recently closed reactors, investing in the French fleet as it exists today, and not closing the other 3 reactors in Germany. The piece we quoted was called Switch Off Putin, Ukraine Energy Solidarity Plan. which was put out by an outfit called Replanet. I want to give them proper credit for the work that they did. We got those numbers from them. But even here in the U.S., we just put out a piece about the Colorado River called Buy Me a River. And these big dams like the Hoover Dam and the Glen Canyon Dam, they are under threat right now because of reduced water supply and overuse of water resources on the Colorado. California has the Diablo Canyon nuclear power plant, which is set to be closed in the middle of this decade. That plant alone produces twice the power of those two dams. Like, we have these facilities, they exist. Why are we closing them? The simplest, most beneficial investment we can make is to keep the fleet we have and then build out new reactors, preferably small modular nuclear reactors, as the true investment that begins to make a substantial mark on our efforts to decarbonize.
All right, I'm going to ask you one or two questions about nuclear, but folks, for a while now, I've been thinking about bringing on a nuclear expert on this channel to really go deep into the technologies, both the opportunities, also, hear how they're addressing some of the very legitimate, longstanding concerns around, safety for nuclear energy and whatnot, the toxicity, obviously. So if you're interested in seeing that, please let us know in the comment section below. But two questions for you here, Doomberg. One, beyond just sort of maintaining what we have, I guess you mentioned you think we should be investing more in these small modular reactors. What's if we started doing things right from your perspective, what's the timeline to get to a place where we're seeing, material benefit from, zero emission nuclear reactors, and maybe making us a little bit less dependent, reducing our dependency on these fossil fuels that we don't like the emissions for?
So there's sort of two-part answer. First, there are no technical challenges to doing this. These are solved problems, including nuclear waste, which is, we have written, largely a canard. There's no real issue with nuclear waste. Everything is a trade-off. But I would tell you and remind your viewers to consider that we have today in the US Navy small nuclear reactors that power vessels and have done so safely without incident for decades. These technologies exist. The only thing standing between us and a world with far more carbon-free electricity is a combination of political will and some expense. When you measure that expense against the alternatives, because nothing is free and everything is a trade-off, it is simply undeniable that reinvigorating our nuclear fleet while we are bridging with increased natural gas production, while we're investing in polysilicon production in the US, so we're no longer beholden to China and relying on thermal coal and slave labor in China to make our solar panels, this is the solution. All alternative solutions pale in comparison or are untenable by the laws of physics. And so we will eventually have to get there if we truly want to reorient our economy around GDP divided by CO2 emitted. So the sooner we can get there, the better. We've been screaming this for the entire life of Doomberg and before it in our professional lives. But this is the answer. Like, small modular reactor technology is safe. It exists. It can be scaled. The waste problem is a canard. We know how to handle it. When was the last time you heard about a big nuclear waste issue at a plant? When was the last time you heard about an oil spill? You hear about them all the time. When was the last time you heard about a battery fire? You hear about them all the time. There is no risk-free path out of here. All decisions come with trade-off and risks. Among the pantheon of options available to us, it is just undeniable that reinvigorating our nuclear energy strategy is what we have to do.
All right. Boy, that opens up so many questions for you, but I don't have time, at least in this conversation, to get into them. So we'll have to leave it there. But Doomberg, thank you so much again for really unpacking, everything that's been going on the energy space here. We have a number of European viewers of this program. I think they've taken a lot of value from from this discussion here. So just in wrapping up here, I want to give you the opportunity to speak to where can people go who want to be exposed to kind of your daily, weekly conversations around these issues?
Yes, and I appreciate the opportunity, Adam. Yeah, all of our work can be found at doomberg.substack.com. And we're also very active on Twitter at DoombergT. Our Substack is in the process of pivoting from free to paid. And so all of our previous articles that we've discussed here are there, but also come May 1st, we will be a paid-only newsletter, and we hope that we will have earned the business of our readers. And as a content creator, that's always a big step to take. It's one we're excited about. Our paywall is open. Our articles are still free, but they will no longer be free at the end of the month. And we're looking forward to the next phase of our journey. You've been very helpful. Our appearance here was a great boost for us, and hopefully today's appearance will be another one. And also our friendship offline has been very valuable. So Adam, I can't tell you how much it means for you to have us on during this important time for us. And I really enjoyed the conversation.
Well, it's always a pleasure, and Doomberg, I look forward to having you back on this program many, many times in the future. For folks that haven't yet gone to Doomberg and read their material, I suspect a lot of folks are going to go do that after watching this video. But go do so quickly now before the paywall comes down, but then register, subscribe once the paywall is actually in place. Before Wealthion, I ran a content newsletter business the way that the folks at Doomberg are doing. What they have been giving the world for the past year is nothing short of a tremendous gift. You've been getting the highest quality analysis on a lot of these key trends that are literally driving what's going to happen, the main drivers of what's going to determine our future. And as I mentioned, they really are the most important new voice that's entered into the financial media space. And they have been giving it all away for free for an entire year. So, Doomberg, when you talk about sort of earning the ability to go behind a paywall, you have, and then more so. So, folks, in wrapping up here, we talked, the axis of this conversation was this recent piece by the Doomberg team called Measure Twice, Sizing Europe's Natural Gas Crisis. If you want to get that article, go to wealthion.com/natgas. You can download that article for free. Also, there'll be a great big button there to go and learn how to register, subscribe for Doomberg's premium service, which is launching, I think, just in a week or so, you said?
Indeed, yeah. So as of April 30th, May 1st, we're going to be 100% paid, and we've tried to price the product at a very reasonable, accessible value for the product that we're putting out there. And like as you say, you have experience in this space. It's always a huge step, and we're thrilled with the response so far, and we're really looking forward to writing exclusively for the people that value our work the most, which is the real benefit of the subscriber model.
All right, well, fantastic. And folks, if you haven't yet subscribed to Doomberg on Twitter, you absolutely should. They post throughout the day. It's a ton of continued insights that are completely free, and it's a great entry into seeing what they're writing about on their Substack. All right, well, look, if you've enjoyed this conversation, if you'd like to see more great guests like Doomberg on this program, please help support this channel by hitting the like button and then clicking on the red subscribe button below, as well as that little bell icon right next to it. And if you are interested in figuring out, how to potentially invest in some of these energy plays that take advantage of the trends, and especially all of the capital investment that Doomberg was just talking about here, you should go talk to one of the financial advisors recommended by Wealthion. You can do that just by going to wealthion.com. And with that, Doomberg, I want to thank you for giving us so much time yet again on such a critical topic. Everybody else, thanks so much for watching.